trying to get the reference point, so it's obviously the same as the NASDAQ, guys, obviously. You'll see that we had this, this level. The higher hold brings dangerous levels into play. The 398 is the first one, okay? 398s. That's the 398 level here. Stay above that, and the market's bullish. Go below it, and the market goes bearish. It went below it here. Look at what happened when it went below 398 here. See what happened? It got bought, and it got bought. And then when we came above it here, we see it starting to buy above here. The market stays bought at that stage. Coming into the cash open, the market's above 398. Yes? So if it's above 398, where's it going to go to? 400. Where did it go to? 400. So it went from the 398s, the level we gave you last night, and the big level is the 400s. Where did it go to? Between 398 and 400. The two prices that we have on the screens. If you took the tweet and drew the level, and took the tweet and drew the level, you'd have had those two levels there. That's the levels you would have had on your charts. You can see the buying below. That should not have bought below. It should have sold below. It was getting bought below. That shows an accumulation phase during that period there. Now, if that's in an accumulation phase, you might be able to recognize it perhaps from some dealer accumulations. That might be something that would be a reasonable thought process for you to start looking for and starting to spot. Hold on a second, I'll get me chart. Now, when you're thinking about this as a possible dealer long position, does it show up? That's the question. Is it visible that the dealers are active at 1:30 today? Well, let's take a look at the run into that bottom edge. Remember, we've already given you the bottom edge price. You're already aware of that bottom edge price. So we can see that there seems to be some real heavy selling coming in here, but look at what happens in here. Do you see the delta stays negative at this point here? The delta stays negative. The price rallies. You've got asymmetrical order flow, bullish asymmetrical order flow at that price, haven't you? You see that? Bullish asymmetrical order flow. So when you've got bullish asymmetrical order flow, you're already starting to think to yourself, okay, that makes sense because that's around about that price that I'm talking about. Remember? That's around about the same price at 13.15. The price was 398 on the Qs. So this is the equivalent of 398 on the Qs, this price. And there's the dealers buying all that selling and taking the market with a withdrawal of liquidity higher. And then what do? You say, okay, let's see what happens when they come back down again, if they come back down again. They do come back down again, and you can see what happened to the deltas. Dealer buying. Again, 398. Dealer buying again, 398. Into the bottom print again, dealer buying. And you say to yourself, wow, okay. So the dealers are buying into these areas. I should be able to, what the hell am I drawing here? I should be able to draw better than that. But the dealers are buying into these areas. You can see they're still capping the upside. And then what are you thinking? Okay, they're going to go for a squeeze at the cash open. And obviously they take the price down into the, not into the cash open, but they take the price down to get another bag load of liquidity. And look at what happens. Huge selling. Why? Because there was big buying up here. There's a lot of people throwing away positions that they didn't expect to have to do, but they take it price down. There's a lot of selling in here, guys. That price is getting jammed. Look at all those orders. Jammed, 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 jammed. They're all getting jammed. The bottom line, you start finding a bottom line and you say, okay, now I'm starting to see the story. Now I'm starting to recognize the story. Buy-side business, huge dealer selling, huge dealer buying accumulations, and then obviously we get the markup phase. And then as we come into the next phase of the market, of course, the next thing that's going to happen, of course, is going to be what? The cash open. The price pulls back to the half-back trade. You can see selling coming in, and again, the dealers absorb all the selling. You can see all that selling there. Price is higher. Dealers are buying. Dealers are buying NASDAQ just here, coming into the 2 o'clock. What happens? Price goes back up to retest at the highs. It caps out again at the new top edge up here. There's the half-back trade level now visible. And you can start to recognize what happens. And all of a sudden, we come into the cash open and then whoosh, straight up, straight north. And it came, if we zoom out a little bit, what does that look like? Does that not look like just about every single drawing we've ever done? Of course it does. They always look the same. So the accumulation probably coming in through this phase here. The capper price, one would imagine we could obviously stretch our ideas out to the capper price here. And you start looking at that and going, that's just the same as every other drawing you've ever done. Yes, it is. It's the same process. It's the same narrative. It's the same idea. It's the same accumulation process. It's all that heavy selling delta. And then pop straight up to the big takeaway to the upside. Massive profits. Massive profits on that NASDAQ trade. And obviously you can see what happened. It was a very, very big popper to the upside right off that 398 wholesale price level. 398 up to 400. And what happened at 400? It stopped moving higher. Just jammed it completely at that point. Crazy, 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 crazy. Crazy beautiful, more like. Well, they tell this. I don't think they tell the story, Miguel. I think they confirm the story. Because once you see a story, what happens is they color it in for you, don't they? They show you that they're doing it.